Good morning, everyone. Welcome back to another weekly review. So we just finished week 18. Today was the first week of June, which is summer month, and we're also NFP week. So probably one of the poorest week I've seen as of lately, because again, we're the first week of a summer month, especially that it's a summer month, just adds less volatility. But let's get into it. Coming into the week, so I wasn't comfortable with how Friday closed, and we had a fast reaction higher and fighting between two order blocks. So I don't have a clear bias. I'm not saying it's going to go lower. I have a sell side here and a buy side here. We're fighting between two order blocks. But I am saying that I would like to go to the lows within next week, July 17th. And I'm saying that because that's the 60-day look back, look ahead. All right, if price were to get to this area here, that July 17th, this low would be exactly 60 days away. So I want the algorithm to run this low before July 17th or around July 17th, right? So it can go past July 17th, but basically that's a bias that I'm looking for. And summer months, usually we could see a trade lower anyway, so it's like a seasonal tendency too, where we see a low be created before the year rallies up. But May so far has been extremely bullish. If you look at the month of May, very, very bullish. So it's very possible that July just continues to trade higher, especially with all the volatility that we're going to get this summer. It can also just go up and down, like down and back up to new highs and back down to the lows. So this is the comparison between the NASDAQ, the S&P 500, and the Dow. So the NASDAQ, see how that candle's bearish, and it did not really expand higher, but the ES and the Dow did. So now, I always said how in a true bearish market where we have the highest probability of having a lower bias, the NASDAQ should be the leader. It should be the one leading the markets, pulling the markets down. If the NASDAQ isn't going down while like the Dow is going down, which it had been, you see that move lower, that means that there's some big sectors like the tech sector which are holding up the stock market. And so because they're not moving together, because the Dow still has some tech stocks in it, it's not all industry. These are very correlated. So the S&P 500 and the Dow both have, the Dow a little less, but they both have tech stocks inside of them. The NASDAQ just has a lot more. Most of the money that forms the NASDAQ is mostly tech stocks. So because these two, yeah, they're going lower, but the NASDAQ has less of their, whatever they have. So the stocks that the Dow and the S&P are mostly made of, that the NASDAQ just has less of those that are going lower, which are in sectors like services and all those things, and in industry, which I think eventually might affect the tech sector. But right now, the tech sector is pretty strong. They have good earnings, and people seem to be buying their stocks. So until we see the NASDAQ really give in, which it looks like it's starting to, that's when we're going to see really lower prices. Like it's really going to go lower. So yeah, so I'm just pointing out how it's starting to show weakness, at least, while the Dow and the S&P 500 are trading higher. And this is the dollar. Dollar is a very low probability. I mean, you look at the 4-hour chart in the past week, and it's extremely low probability. It's just moving sideways, consolidating. So do we want to trade in this? No. It's better to wait till it trades either to the high or low before looking to do anything, because this is a consolidation and there's orders built up on both ends. So where's the liquidity? Liquidity is high and lower. The only thing is it looks like it's trending higher. So there's probably more liquidity lower. You see the low here, and then we have a higher low there and a higher low here. A lot more people are probably going to try and buy this trend than sell the trend that's higher, right? The high there, high there, high there. It's like a wedge that's going higher. There's probably a lot more stops or people waiting to buy the breakout if it crashes lower and continues this bigger move down, which people may think could happen. And so that would just create more liquidity. And this is how I visualize price. I ask myself, okay, where is the most liquidity? Who can, if I'm making the markets, if I'm the one that's booking price, who can I hurt the most? That's the way I look at it. And that's actually what happened. It traded lower and then it rallied higher at the end of the week. So bonds still on their way down from the area highlighted last month. And as you can see, I highlighted this area. This is an order block there, or I wouldn't say it's a propulsion block actually, but if we're going to continue the higher time frame trend, right, with the bond market of going lower, we want to see these up close candles act as resistance. Even if we're in a big premium, we want to see them act as resistance. There's relative equal lows on the 5-year, so seeing price come down to this level is something that I have in mind. It's very clean. So we had an up close to start the week, and we ran down into Friday's session. I noted how the bodies are still finding resistance at that fair value gap on the daily chart and the order block. However, this is we still closed into this order block here, so we're still sort of making our way higher. This is more of a up close, more bullish because we had an up close daily candle, but it's still both sided. I'm not really set in stone after this day on a bias whether we're going higher or lower. This is I talk about how we found resistance at that daily order block in the 1 hour reclaimed order, or this is 4 hours. So if you go down to the 1 hour and move high to that low, that order block, and then this down close candle here, the PM session created this order block. Why is that an order block? Because we dug into a higher time frame level, which is 50% of the reclaimed order block here. See that? Oh, did I measure those? So it's actually, yeah, they're off a little bit. It's actually supposed to come down to 75%, that line there, just about 75% of that level. And mean threshold, which is 50% of that, the body of that down close candle. So we have 50% of that price. The body stayed outside the order block, but the wicks found support at that mean threshold. So right now the order flow is looking bullish. It's looking like we might at least try and target this high up here. This is a 1 hour chart, a 1 hour review. Guess we made a nice move lower in the morning and turned around in the afternoon. Now this is the 15-minute chart. I want to just show the last Thursday's price action, but not this week, but the week before. Compared to this one, it looks almost identical, right? You have a trend higher earlier in the morning, and then you have a little bit of consolidation, and you have 9:30 or 8:30 run up, make a high, and then 9:30 turn it the other way, consolidate a little bit at the open, and then send it lower, creating a market shift and leaving an order block. So you had the similar thing here, except here it was a little bit more, in my opinion, it was a bit more volatile, a bit more clear. Well, it was definitely more clear. Like we had bigger candles lower, and we moved a little bit more compared to the smaller, tighter range here. But I'll go. Actually, I can zoom in here. There you go. So we hit the 1 hour reclaimed order block, and this up close candle is the one that drew into that higher time frame level. And the next candle, which was I believe 9:30 open trade, or actually could have been I think it was 9:30. It one more time made its way higher, but ultimately closed way below this order block. So this was an order block now because it's in premium. It's the highest up close candle, and we had displacement creating a market shift. Right, this actually all these consecutive up close candles are actually order blocks here, and we draw back into that and then continue to run lower down to the new week opening gap, right beneath the overnight lows, or above midnight open as this happens too. But this is the range higher, which is the higher time frame order block. I'm identifying this range because since it's all an order block, I'm anticipating price to use this as resistance once we get beneath it. and we create the market shift there. Right, that's a 15-minute short-term low right there. And we have an inverse fair value gap inside of this order block, where you can refine the order block down to inverse fair value gaps, or use levels, balance price ranges to refine these guys. And this is also a balance price range because we have a fair value gap overlapping this one here. I know it's a little off, but that's because it's on the lower time frame. I'm refining this 5-minute inverse fair value gap. And then we have a breakaway gap, which was left here. Right, this is an immediate rebalance. So I was able to anticipate this staying open. Why? Because when we initially move lower, create the market shift, we have a retracement. But once the retracement is done, if we want to continue going lower and deliver lower, we're not going to keep retracing. We're going to have a nice and quick price action. And if we see an immediate rebalance, oftentimes it's a failure to trade into a breakaway gap. So it's a failure to trade to a higher time frame fair value gap. And we close out a fair value gap and leave this as a breakaway gap. And then we make our way lower. That's the easiest way I've been able to use immediate rebalance. Whenever we leave a breakaway gap, I look for an immediate rebalance like this before leaving this range. And then we run lower beneath sell side liquidity, expanding past midnight open. And on the 1-minute chart, had the 10 o'clock hour news come out, run back to this breaker block, then run lower, and we consolidated a whole lot, chopped around. Now inside this consolidation, personally what I was waiting for is a more meaningful run above these relative equal highs. I was looking to trade, but because we just wicked above them, I didn't trust it enough to see a run on stops. And I said, yeah, it consolidated, it can come back once it starts to leave. It can come back and have a body close above these levels, and one more time hit that reclaimed order block, and I will wait for that if it happens. It didn't happen, so there was no trade. But once I did see this move run lower, we see it come back to this fair value gap, which is an inverse fair value gap, and price just gets held there. I was talking about how I wanted to see this level, this initially resist price, and then it went up instead, up to the fair value gap just above it. So then that's when it ran, refusing to go back to discount because it's already retraced it within this area here, right, with the breaker block there. And then we run to sell side liquidity. This was about, how much was this? About 50 points. Alright, and I think that's it for Monday. Alright, Tuesday was a really tough day. I know a lot of people struggled just by looking at different streams from that day, and I made that mistake of looking at other people's streams on Tuesday. I almost never do it, other than when I'm not trading, right? And that's why I wasn't planning on trading, so that's why I did it on Tuesday. But another day where, okay, we're sort of hinting that we do want to go higher. We're leaning towards wanting to go higher here. People might think that this is a retracement and that we might form the high of the week, right? But I would have wanted the high of the week on NFP to be formed by now, right? NFP is going to have the bulk of the movement, so it's very possible we keep consolidating or edging higher until NFP, which could send us lower, right? So here I mentioned how we're in a big premium, okay? And I don't know. Oh yeah, and we're all day. So all day we're in a big premium, right? Look on this chart. Do we have anywhere where you see a significant move lower? Like a significant run on stops on the 1 hour chart? No, like you have it here last week. That was Friday. Since the beginning of the week, we haven't had one. So I don't like looking for longs here. If we do look for longs, it'll be high resistance. And I'm not necessarily looking for shorts, unless they present themselves, but it doesn't mean that it's not a time to look for longs. It means that it's a time to look for shorts. Sometimes it's a time to just let price do what it wants and just watch it. But we do have a trend higher, and then I've been pointing out this is low resistance liquidity run. If we want to come down here and sweep these, maybe on NFP, here I'm talking about the London session. Alright, notice how we have a very small London session, a very small London session, a very small London session. We have a very big London session. This was this morning's London session on Wednesday. Whenever you see your London sessions that are bigger than the average of the past 4 or 5 London sessions, you don't want to trade. That's telling you that the price has done its movement. Instead of doing it during the New York session, it's done most of it during the London session, right? So you want to anticipate a consolidation. If the London session from midnight to 6 a.m. fails to consolidate and instead expands, right? Look for the next session to consolidate and wait for the PM. But if instead the AM does consolidate and it's real nice, that's fine. Don't trade the PM, but you're not. It's better to just observe when you see these things, because again, New York is likely to consolidate, or it's going to be super volatile, and it's just better to study it. And this is another example from the very week before. You see the London session a small London session, and we have a slightly bigger one. And the day, where does it really start to move? In the afternoon, right? In the morning, it kind of sends it lower, comes back up against that range, then consolidates until afternoon, around 12, where it starts to trade lower. So just keep an eye out for that. That could have saved so many people on Tuesday if they got up and they looked at the London session. But I identified the London range as the dealing range that a consolidation would take part in. So this London range, this trade lower into the breakaway gap here, I wanted to see this price failed. If it got above it, sure, okay, it could expand, but I wanted to see if we were going to consolidate, where would we consolidate? It'd be 50% of this range between premium and discount. And as we're trading within this range, I'd only look to buy if we get to a big discount, the most extreme discount inside the morning, or the most extreme premium inside the morning. And we stayed beneath midnight open the whole time. So it was hard to look for buys here though, because on the 15-minute chart, there's nothing really that shows a significant run on liquidity. Like there's an order block here after running back new week opening gap, trading beneath a short-term low, but there's still relative equal lows back here that maybe could have been better if price had traded beneath those, right, and made a deeper move down. That's why we had this big retracement here, because we didn't really take out a lot of liquidity back here. So price came back down instead of continuing to expand, and then it continued to expand once it retraced. But it was retracing a lot, right? It retraced here and it retraced again there, because we saw no turtle soup. We saw no run on these lows. So in the afternoon though, we had great price action with again, this order block being created and this expansion here creating a market shift. We had price come back to this 5-minute institutional order flow entry drill. There's a 5-minute inverse fair value gap there too. That price gets above. So we just wick into that, and then price continues to run higher. So past the midnight open, by the way. And this is the 1-minute view, right? If you wanted to take any inverse fair value gaps, any breakers, order blocks, right? It's just a 1-minute view. Nothing here that I really liked. Again, I wouldn't have really trusted buying up here. I would have trusted more buying the 5-minute inverse institutional order flow entry drill blindly, because I believe on that 1 hour it did create a nice order block, but again, relative equal lows down here, right? Nothing I really liked in the afternoon, but it did move quite nicely. And this is 30-second chart for the morning session. Alright, so I think here's where I want to talk about what I did Tuesday. So I talked about how if you watch the video from Tuesday, right, I was able to navigate pretty well in the most part of the morning. The model I wanted to see 10-15 reversed higher, and I was right about that, but that doesn't mean I should have been looking to place a trade. Right, so sometimes even when I think I know what will happen, it's better to wait until a better day when price is much clearer. Right, so here I wanted to see initially this low get run out, and when it got run out here, I said I didn't trust it because it didn't really close beneath it. Yet the 10 o'clock news expanded much higher, so I was still looking at this low. And as it came down, I was like, wow, price is super wild. And it started consolidating. And then here, if you go to the timestamps at 39, oh, this is not, just go to just go to 39. I don't know what, but at 39 minutes, I'm drawing what I want to see, and it was okay. We're gonna come down beneath this level. I want to see a bit of consolidation, and then a significant move lower. So it was this move here, leaving an inverse fair value gap, and I want to long the inverse fair value gap. Now, I pointed out that even in the recording, I pointed out the lens session how this was lower probability. But however, I wanted to take something because once I started, if you go to one example, and there's other places in the stream where I did it, like 4320, I laugh at the Top Step stream because all the traders on Top Step, it was like 4 of them. When price was trading beneath here into the 5-minute reclaimed order block, they were all saying that they wanted to buy the market. And so you see, they trade, they make money because they're good risk managers. They don't make money because they know what price is going to do. So they're better traders than me, but they're not better analysts, right? So this is what I mean when they're better traders. At least they were able to stick to their rules and follow their model or their logic. Me, I even though I wasn't supposed to trade, I had this sense of pride come over me when I saw that I was right and everyone else was wrong. And it's not just them, it was some other ICT traders, like Tanja Trades, for example. She took a bunch of losses. Every time she took a loss, I was looking to go the other way, the other direction. So it made me feel very prideful, like I'm better than everyone else. And I struggle with this sometimes whenever I start to see a bit of success. And well, especially when others fail. I think this happens to everyone, to be honest, but we start to feel really like better than we actually are. And so this is what occurred. And so I'm watching price action. I'm seeing sort of what I want to see. All right, but the entry that I wanted was I wanted to see. Hold on, maybe there's a better image that I can use. So I wanted to enter in this fair value gap on the 30-second chart, but that yellow line that you see there. Okay, yeah, that's this yellow line. So that's 50% of the London range. I wanted to enter beneath 50%. So that inverse fair value gap I wanted to see was above 50%. So I was right not to take it because it was against what I wanted to see. However, it worked. And I'm watching it work there, and I'm like, and then it got to midnight open, and it went back lower. And I thought, okay, maybe there's going to be another opportunity. It's just high resistance. It's going to continue going up these relative equal highs. I want to clean them up. And I wasn't instead thinking like an actual analyst and a trader. I started thinking like a gambler, right? And this is something that I'm willing to admit because it's the truth. And it's one of the things that stops me, and probably a lot of other people may struggle with this too, from actually being profitable in trading. It's a very good example of why I lose money sometimes. Alright, so this trade should not have been taken, and I only lost $100. So it was a very tight stop, and well, it wasn't the end of the world, but it made me feel very, very bad because I had so much joy, so much excitement over the morning that when I took this loss, I immediately went from super happy to a lot more sad. Even though it was only $100, I was still in more distress than I normally would over a loss. And that led to me taking another trade in the afternoon, right, which you saw this one in the afternoon, which I was right on price going up, but I got in way too early. As soon as I could get in, I looked to buy. And that's not okay. Instead, it consolidated a whole lot, and it required a lot more patience. And again, another day where you just don't want to trade. So, anyways, yeah, that was what I wanted to say about Tuesday. Now on Wednesday, June 5th, so huge up close candle, and I talked about how NFP is likely to be bad news based on what the other data is, and yeah, it was slightly bad news. right? I just added the economic calendar, but it went up from 3.9% to 4%, right? But I don't think it's as bad as most people expected. So even though it's bad news, it's not necessarily bad news. And I think the reason why that is because, yes, there's a lot of layoff. If you look at unemployment claims, we have a lot more, especially last week, we had a lot more claims go up. And it seemed like the labor market was starting to crack, right? And this is really bad if it does crack. That's when the recession really happens, and then the Federal Reserve have to decrease spending so that people have more money to save, and so it reduces inflation. But inflation is hot, and it's been moderately above 2%, and that's the Fed's goal, to keep it there. They want to keep it at 3% around. So inflation is not going to really come down, and it wouldn't be in the Federal Reserve's favor to have employment go up. So why would employment not go up? Because all these people are getting laid off. Yes, they're getting laid off of these 9-to-5 jobs, but because inflation's hot, they're able to go to the service sector and get a job there, as maybe in the retail stores, at the mall, or as a Uber driver, and they have like 2 or 3 part-time jobs. Well, then inflation's going to continue running hot, and people are going to continue making money. They're just going to downgrade their jobs and work a lot more. It's going to make people less happy. So I don't think that it's going to crack as soon as everyone thinks it's going to crack, and it's likely that it continues to stay strong the rest of this year even. Who knows though? Maybe this summer it's going to start to crack, and really we're going to start to see high unemployment. I don't think so though, especially not in a political year. I think that the Federal Reserve knows what they're doing, despite what some other people think. But I could talk more in hours talking about this subject, so let's not continue any further. But yeah, there's no way I could have felt comfortable getting in the trade today. Just looking at the day again, do we see a significant run on stops? We do over here, but that's so insignificant compared to the higher time frame. All these days we have huge lows that are housing liquidity, and we have not traded down to these. Okay, so just because we have that small trade lower, how much in premium is this? If you go from that low all the way to this high, it's in a huge premium. If you use a 60-day, 40, 20-day look back in the hourly chart, it wouldn't be a day look back, it would be an hour look back. And you're at that candle, you'd have that close to, actually, we can even do it right now. All right, we'll go to NASDAQ, 1 hour. No. And replay over here. So look, 93%, 89%, 89%. This isn't a premium. If you go from 0 to 100%, this is 100%, that's 0%, or whatever the 20-day. So we'll do like the 60. Okay, so yeah, it's just about down here, here, and here. It's still in a very much premium. So you don't want to be looking for on the higher time frame for it to expand higher. It wouldn't make sense. But that's what happened, right? So I would not have felt comfortable trading, and I wasn't actually planning on trading today because it's ahead of NFP. Right? This was a Thursday. No, this was the Wednesday. Okay, no. So I was actually planning on trading, but yeah, there was just nothing I liked. And if you deviate that, the only really move lower that was significant this week was Monday, which traded to the mean threshold. And if you take that range that traded lower, deviate that, we have one deviation here. I wanted to see if this would be a high, or maybe 2 deviations, right? But that's what these deviations are for. So, or projections. Alright, but on the 50-minute chart, it's still nothing I liked. Yeah, it formed an order block and it continued going up, but I would not have felt comfortable based on the higher time frame looking for trades on Thursday. Or sorry, Wednesday. And Thursday was an absolute clown day. A terrible day. Looking at the daily chart, it did nothing. Absolutely nothing. The only 2 hours that really moved were 9 o'clock, which is the 9:30 open, and 10 o'clock. and I think there was news at 10 o'clock. So, right, or maybe it was at 8:30. The news. No, it was at 8:30. This range overnight that was left at that one deviation, once we got above that and we started to consolidate, then we had a run that made a low and a high of the day, and then we stayed inside that range. So I'm seeing how price wants to gravitate around 50% ahead of the 9:30 open. So I'm just dragging this level out to see if it's going to want to continue gravitating that 50%, or if it's going to create a new range. Then you'd want to see it gravitate around the new range is 50%. That's what happens in a seek and destroy condition, and you only want to look to trade to that 50% from the most extreme lows and the most extreme premiums. But head into Friday. Okay, this is sort of starting to look a little bit better, right? We have a move higher, consolidation, and we're moving back into this fair value gap right away. We're not continuing this momentum and coming back to it at a later time. Right away, we're trading back into this fair value gap. Now, this is not a bearish order block. I know I noted a bearish order block. I should have put a question mark, or something else. But this isn't a bullish order block. This is just something that can provide price with support if it wants to continue going higher, like a propulsion block. That's a better word for it. A bullish order block is why not? Because we did not take any lows, we did not take any significant liquidity, and we're in a premium. So if you go from 0 to 100%, we're way above a C95, 90%. So we don't want to see any bullish order blocks here. We want to see these bullish order blocks act as resistance once we get beneath them. And it can keep going higher. I'm not saying it's going to go lower here, but there is a case for it to go lower. There's a divergence between the Dow and the NASDAQ. And we're starting to see the NASDAQ be the one to want to trade lower. There's also this short-term high, which just ran out, and we closed above it after creating an all-time high above these relative equal highs. And we have a large fair value gap, which could be used as an inverse fair value gap. So this is, if you go on the lower time frame, what I do every day, what I look for every day on the 1 minute chart, this looks like that. And if we do see price quickly come beneath this fair value gap and close beneath there, yeah, it's just something that I could certainly look for higher time frame trades. But this is what I was looking at in the morning, right? And the idea was that we would move back into this range. Okay, but one thing I noticed was in the morning when I got on at 9, we had a huge wick up with NFP above this buy side liquidity. Now, yeah, I wanted to move back into the range from yesterday, but because of this big wick, I knew that there was still going to be liquidity up here. Why? Because look at where the bodies are. Go on your own chart, or actually, I'll just do it here. I'll show you what it looks like without wicks. Right? We'll go right here. Right, what does this look like without the wicks? Does it look like liquidity was taken? Like, no, it doesn't. These are relative equal highs. There's relative equal highs all throughout this area, all overnight, all relative equal highs. This is people that are trading the line charts, or not these bars. There's some, I think it's, well, I don't know, but some people trade the line charts, or some people just look at the line charts, and they see these support and resistance, maybe like on the hourly chart, and they're like, oh well, it's finding a top here, and no. So when it goes back up and it breaks this top, as we go later, and it breaks above, they see this as now an actual breakout, right? You can't only look at the candles, you need to also look at the bodies, and the bodies show that liquidity was only taken in the afternoon, and that's when price goes lower. So that's one thing you want to keep in mind, is to look at the wicks. No, sorry, not look at the wicks. Oops, my bad. And that's one reason why, or that really the only reason why I wanted to see price come back up here and trade to that buy side liquidity, or this one over here. I'm ignoring that wick. So if you want to try and think about why that is, I explained this many times, but I'm just going to explain it again. if you want the market to be efficient and you want orders to get filled into the market, and you want as many people that have this conviction that price is going to do a certain type of thing, right? Then you're going to create these levels where price consolidates, and then people can start to go both ways and think, oh, I think it's going to break higher, I think it's going to break lower. Most people wait until one of the two happens. So you see, when we're consolidating here, price breaks higher, people are going to start to buy because they think that it broke the resistance, the high, the consolidation. However, this was so quick that people didn't get a chance to do that. That's why I ignore these wicks. Instead, it went lower and people thought it was breaking out lower. And so then that's why price went higher to trade one more time above that buy side liquidity. Now notice I'm using the range, and you watched the recording on Friday. I was using this range. I was ignoring this wick. I'm using this range as my dealing range in the morning. I want to get in beneath 50% if I were to look for longs. There was a good opportunity on the 5-minute chart, but I didn't like this. I just didn't feel comfortable taking this because we had such a big move lower and there's such a big fair value gap. It did consolidate a whole lot. It was not nice and quick, and so I felt better just staying out of it. What would have been real nice if I waited till the afternoon, but I didn't trade the afternoon. So the afternoon was really nice though. So you see we had short-term low. We ran that stop. We ran the short-term low, created an order block. That order block is this down close candle here. Why? Because this is the one that ran into the short-term low into the higher time frame PD array. So that high down to that low, that's all one range lower. And I'm taking the last down close candle, extending that out. We found support there in the afternoon. Match that order block with this fair value gap here, and it's also a 15-minute fair value gap. Pretty strong level. We run up from there. Right? There was not a bad play ahead of 9:30 open. That was a nice fair value gap, but that's ahead of 9:30. 9:30 makes no significant Judas swing, no significant move lower, and instead consolidates. I was watching this inverse fair value gap here, but I didn't like how much we were consolidating. It took a very long time for price to run higher to the buy side liquidity. And yeah, like I would have wanted to happen during 9:50 to 10:10, but it didn't instead. And it made it high and then retraced and it continued to go higher. Why did it retrace though? Because it didn't make a significant run lower. Right? All this consolidation was a small trend higher, so we had lots of liquidity trending higher. And so it's retracing a lot more, shaking out buyers, people who are buying breakouts, people who of all this consolidation. And in the afternoon, I don't show the smaller time frame, but we get a short-term high after taking out the buy side liquidity. And on the 15-minute chart, right, we close above it, and we get an order block here that we can use to trade lower. Now, there wasn't really, other than the order block and the short-term high on the 5-minute chart and the 15-minute level, there wasn't anything that really that nice that I would have really loved to trade. Like, I would have had to trade from a 5-minute perspective. If I looked for a 1-minute entry, I would not have been able to find one. I would have had to buy this order block or sell this order block blindly, right? Buy a short or sell, get into a short, buy this short on this order block blindly down to any discount level, but or above the minute open too, by the way. But in my opinion, this could have created a higher time frame market shift, and going into Monday, we can see this momentum continue. So there's still opportunities from this price action. And anyways, that was all. And then I don't know, I mentioned the unemployment rate, right? How it's unlikely to really ramp up too much, even though the unemployment claims went up quite significantly, and they're still going up this week, right? And last week, if you look at those, they went up. The job openings are reducing too, which means that there's less people asking for help. There's less people hiring, and you have, well, yeah, you don't have necessarily in the job market, you don't have the best news, and unemployment's going up a little bit, but is it going to continue? Right? I don't think so. Anyways, that's all for this week. Thank you very much.